Hello and welcome to Season 3 of the Lawyers Learning Center with DHIA podcast. This season, we are going to celebrate insurance awareness by discussing prior acts coverage, gaps in coverage, policy benefits, and the cost of professional liability insurance. Join us here every Thursday morning as we continue to deliver insightful information on professional liability insurance, discuss business insurance solutions, and unpack the phases of running a business. Preventing gaps in your insurance coverage. We cannot stress enough the importance of maintaining continuous coverage. As an attorney, one thing you do not want to do is take the risk of having a gap in your professional liability insurance coverage. The main reason is due to the claims made and reported nature of the coverage. Each year that you maintain continuous coverage, your prior act's date remains the date of your first original policy effective date. If a claim arises from work you have done in the past, your policy covers you back to that prior act's exclusion date. If, however, you have a lapse in coverage, your new prior act's date will be the effective date of the new policy. How do you get gaps in your insurance coverage? 1. You are late with your renewal process or payment, and your current coverage lapses. 2. Your policy was canceled for non-payment of premium and not reinstated. 3. You terminated your policy and did not purchase an extended reporting period endorsement, also called tail coverage. 4. You joined a new firm and they did not pick up your prior acts. 5. You switched carriers and the new carrier applied a new prior acts date. What can you do to avoid gaps in your coverage? Always contact your agent before your policy expires to discuss your options. If you change firms, you can request to be added to the new firm's coverage with a prior acts exclusion date matching that of your previous coverage. This will be subject to the new firm's carrier's underwriting guidelines and is up to the new firm as to whether they want to take on the exposure of your past acts. Talk with your new law firm as you transition to their coverage to discuss options. Never assume anything. Although your former firm may have some coverage for acts, errors, and/or omissions of its former employees, this coverage is usually to the benefit of the former firm as the named insured and not to you individually. Purchase an extended reporting period, aka tail coverage, even if you are changing professions. Past errors can follow you. Thank you for listening to another episode of the Lawyers Learning Center with DHIA podcast. If you found this information useful, please subscribe and share. We invite you to share your biggest takeaway in the comments and ask us a question or two. Your feedback will help us adapt and expand our topics for you, which is why we are here. If you're new here, we encourage you to listen to our first 2 seasons. Our Lawyers MBA series was created to cover the topics law school missed and is packed with actionable tips on running the business side of a law practice. Tune in next Thursday as we break down professional liability insurance to help better understand insurance coverage.